What's up, everyone? This is the NQ4825 review and outlook, and we're going to go ahead and get into it. So, for the review, first of all, I just got off vacation, and coming into the new week, we absolutely destroyed two of the targets that I had marked up, which are the ones that you can see here. We cleared this one and we cleared that one, and I believe we cleared this, but I don't even remember if I marked that up. But I have these two targets as my next points with 15,709, but this was the main one. I think it was the last one at 16,186 that I had marked up, and we just gapped down to clear these two targets, and I believe this one as well, and almost gapped to clear that one before having a retracement here on Monday. And now we are currently, bearish at the moment, but overall, that's what happened. The bearish price action, according to the bearish run that we analyzed, is still moving. So yeah, that is just continuing that. We'll get to the outlook here in a second after we go over the positions that I took today. So I took one position here. My first position was based off of the reaction of a 1 minute SC, which was a part of, which I'll show here in the live, was a part of this run here after mitigation of the two daily targets or macro targets, and we mitigated a 1 minute SC in there, and then we got some bearish price action that was generated here. This led to this being the sponsored candle to enter off of. And now this is something that a lot of people actually mess up, and I'm going to clear it up now. So the reason why I choose sponsored candles or points of interest the way I do is it has to make logical sense to me based off of structure, breaks of structure, liquidity grabs, which are concepts that are taught in the RCV curriculum. Find it on YouTube, RCV, right? And it's really RC Visionaries. So everything that I've learned is basically derived from them. But nonetheless, I got really good at picking POIs, probably one of the best in the group at picking points of interest, but that's neither here nor there. So why I chose this 5 minute SC, despite, looking like, oh, okay, well, if Brendan, you often talk about the origin of the move, this looks like the origin of the move all the way up here. Why didn't you choose that one? Well, it's based off of this. There are certain characteristics or markers that I need to see for a sponsored candle in order to deem it a valid point of interest. The first thing that I want to see is the full body, which is directly from RCV concepts, is I want to see a body to wick ratio favoring the body. In other words, I want to see more or less a full-bodied candle. And let me go ahead and change this here. Oh, that's not what I wanted. Yeah, we'll do that. That's fine. All right, yeah, so I want to see a full-body candle. So based off of that, more or less, this is like a rule of thumb. It's not always going to be a full body candle, especially based off of time frames that you look at. Say if you were confined to just the 6 minute or the 5 minute or the 3 minute time frame, it may not resolve based off that time frame into a candle at all. And that's actually clearly shown here, but you see that I have, which is basically my second position, I entered in off of this wick. But when I resolved it down to the time frame that I'll show you, it actually is a candle there. But so the full body candle is something that you just want to train your eye to look at, but more or less you want to, how do I want to say it? You want to put logic behind why a move happened. And so the first marker is looking for a full body candle, body to wick ratio favoring the body. But the second thing is it's based off of structure. So the second thing I want to look for after a potential point of interest is created is I want to see either a break of structure or a liquidity grab. And specifically in those two, I want to see it uninterrupted price action. Now, what does that mean? I was very general with this, but if you look here, when I say a breaker structure or price action, if we see that we have a price run low, high, as such like that, then when we generate the opposite, a reversal price action or bearish price action in this case, conversely to this bullish price action, I want to see if this was to be the origin of the move, I wanted to see straight black candles to break this first point of structure here. And because we had interrupted that price action, what's going on here? Ooh, odd. Okay, anyway. Because we interrupted the price action here with a green candle before breaking structure there, I ended up using this because this is the last point where we essentially refueled in order to break structure to this low, or break the structural point here, which is this low. And that, in that move there, that had uninterrupted price action. There's straight black candles, 2 black candles there, or my bearish candles that broke that structural point before we started printing, another green candle. And that indicated to me that this is the origin of the move if we were looking to continue bearish price action. And so in line with the structure, I always want to look for what happens, and I preach about it or talk about it all the time, is I want to see what happens at structural points. I want to see what happens at these lows if we're in, bearish run. I want to see what happens at these highs if we're in bullish run. That's the kind of thing. And that's how you find that quote unquote break and retest for finding your points of interest, for finding inefficient pricing. It's all inside of the runs based off of how we break a high or a low. It's all based on structure. And that's how you can read the price action very, very, very simply. And so those 2 points there. And then the third point is obviously I want to see, an unmitigated candle. So like if this candle is already mitigated, which in this particular case it wasn't, if the open of the body or 50% of the body is unmitigated, then that's a valid point of interest to me. So the last point is I want unmitigated candle. And all that means when I say unmitigated is essentially like if I have a candle here like this, then I don't want it, this point from here to here. If say we have a candle that comes up here and taps just the wick, then that's still remains unmitigated to me, because I only consider a sponsor candle mitigated if it taps the open of the body or 50% of the body. But if it only touches the wick, then that's either probably not a part of a sponsored candle or it just hasn't mitigated the candle yet, right? And that happens a lot if you get caught in those traps. If you go back and look at your charts or replay, you found a potential sponsored candle and ended up, getting tagged out because you moved your stop loss to break even and price went actually into the candle. That's probably what happened, right? So those are the 3 things on the 3 principles or the 3 markers, indicators that I use for choosing my points of interest in the form of a sponsored candle, right? When it comes to inefficient pricing, that's a whole other ball game, but it's similar story, right? But this ended up being a 10-to-1. I ended up closing here just because I just wanted to close it because I was skeptical of the price action that was happening. And then once I got a little bit more price action after we cleared these lows here, those relatively equal lows here, so that and that basically are relatively equal lows to me, which is still a part of that structure. Once we broke that there, that's when I found my second position, which is this one here. And so based off the second position, it's actually that wick that was shown on the 5-minute. On the 2-minute was an actual sponsor candle. And once again, using those markers that I showed you, why did I choose this specific candle? Why did I look at this specific wick? Well, one, I looked at the wick because it looked like it had some form of mitigation, some sort of price action that sparked the move to the downside. Then when I resolved it and refined and went to the 2-minute time frame, which is what I consider one of the time frames on the micro perspective, it ended up showing uninterrupted bearish price action, 1, or one, how do I want to say this? One, full body candle. Two, uninterrupted price action that cleared a structural point. And three, the candles left unmitigated. And usually how I'm able to find this or justify the candle mitigation is usually you'll see some sort of move like this where price tries or attempts to come back up to mitigate that candle but fails to do so and has an unsupported run in the direction that it was already going. And so usually when, if especially if you're in the RCV chat, you'll hear me be like, nah, I feel like price is going to come back up to this point. It's usually because I see something like this and knowing that, hey, if this is the origin of the move and this is left unmitigated, then this is the candle that's going to be mitigated, and that's the candle that I want to play. And in this particular case, that's exactly what happened. This is what I played, and right now I'm currently up on this position, I believe almost 1,000, almost 10,000 pips. If you were looking at it from the futures perspective, because I'm showing the CFD chart, it would be about almost 1,000 points. All right. So those are my two positions, but going over here to the live chart, what I want to show you, oh, okay, so now we're up only 500 points, or 5,000 pips, which is cool. Looks like I'll look for another position here. So looking at this from the macro perspective, like I said, we cleared this low. We cleared these lows, that one, we cleared that one, we cleared that low, and we are almost getting ready to clear, or we're looking to continue to clear this low here as part of the outlook for the price action, just continuing the bearish run. There's no reason for me right now to look for bullish opportunities. All I'm seeing is bearish price action. So I'd like to see continuing to this point to clear this low, and I'd like to see continuing to clear this low as another point structurally once we break this low here. All right, so getting back to the live chart on the 5 minute, so looking at position one, this is what it looked like. All right, unmitigated sponsored candle, we have the open, price tapped it, and then we ran to whatever target it was. And then for the second position, it was a part of this wick. So if I'm looking at the 5 minute, you know, it doesn't look like anything, but inside of this wick, we can see some sort of price action because of the bearishness of this candle, and it broke structure here. So automatically when I look to refine, I'm like, okay, something happened in this area, and I see that price tried to come back up to mitigate something inside this area. So why did it continue going down if it tried to come mitigate there? And that's when you start scaling down the time frames. You see the 4 minute looked like a little bit of something, but the wick favors more. The wick is more favored in this body to wick ratio. So I'm going to keep going down. See the 3 minute, and now it's a lot more apparent on the 3 minute that we had a liquidity grab here, right? And once we got that liquidity grab, we had uninterrupted price action that broke structure there, okay? And then we had a attempt after that break of structure to pull back to mitigate whatever's in that wick, and we failed, had an unsupported run, so that left money, that left inefficiency in the market. And so once we found that, that's when I zoomed in and refined to the 2 minute and a part of that candle, and that's where I found this 2 minute sponsored candle, and I'm entered in playing that. So as far as the outlook goes, I know I jumped around a lot here. We're still bearish. I personally am looking from the macro perspective. I want to see price continue the bearish run to 15,730, which is that second point here. So about 15,709, so not 15,730, but about 15,700, right? I want to see price based off of this chart and pricing on this chart. I want to see price attack this next point here. Yes, I have this point marked up, and I want to see that attacked first, but more than likely, if we attack this low, just a feeling, I feel like we're going to attack that low as well. But as of right now, conservatively, the price action and continuing for what seems to be the play is to attack the 16,186, 16,180 target here at that low on the macro perspective. All right. So that's it for this review. Hope you learned a lot. Peace.